What is going on, guys? Nick here, back with another video. Today tech stocks took the biggest tumble that we've seen in months, and the question is why, and does this represent a buying opportunity? So unless you don't pay attention to the stock market news at all, you've probably heard that Tesla and Apple both had a stock split recently. And I made a previous video explaining that usually when a stock split is announced, you'll see the price shoot up over the next couple of weeks, and then once the split actually happens, you'll see the price come back down. Well, it took a couple days, but we've finally seen that pullback. Apple's down about 6% and Tesla's down about 9%. We also had the jobs numbers come out, and we had expected 950,000 people to claim unemployment, but we ended up with only 881,000. That's still a pretty massive number, so it definitely is something that we need to keep our eyes on. Now, the stock market as a whole, especially the NASDAQ, has seen a huge run up over the past 3 months. The S&P 500 is up 17% since June. But run-ups like this don't last forever, and a pullback at some point is expected. Now, there really doesn't seem to be any particular news that's come out that's driving the stock market down. We aren't really seeing any new spikes of COVID, and everything is pretty much on track as it was about a week ago. So personally, I'm not that worried about COVID causing the dip. So then the question we need to ask ourselves is, should we buy the dip? So I looked at my watch list for tech stocks, and I checked all of their one-year price targets. And right now, these three stocks I think are the best deals in the large cap tech sector. It's Facebook, AMD, and Amazon. Facebook, I have a one-year price target of $386, AMD a one-year price target of $104, and Amazon $3,888. Now, Facebook just got relief from Apple after they announced that they were going to suspend some of the privacy features in the new iOS 14 that Apple was going to add. Facebook had particularly complained because it would hurt its ability to use what's called the IDFA, and this is basically used to track a device's unique ID for ad tracking purposes, so people running ad campaigns are able to measure how effective they're running. AMD's pullback is also a great opportunity to buy the dip. I already had a price target of $104 on AMD based off of their $1.46 2021 earnings forecast. The only real recent news on AMD is it previously suggested it was creating products for the high-end GPU market, competing with Nvidia. AMD has reworked Navi and is planning to launch Big Navi sometime around November, hoping to take on Nvidia in the high-end GPU market. Amazon really hasn't seen any major news other than they're adding 7,000 more jobs in the UK due to the continued e-commerce boom that we've seen since the start of the pandemic. Due to the 2021 earnings forecast increase from the summer till today, I originally had them at a price target of around $3,200, but now that has since been pushed all the way up to $3,888. I think the pandemic has only sped up the shift from brick and mortar shopping to online shopping, and it's just way too easy to go online and have products shipped straight to your house in a day or two. This week I needed some washers to seal off a leaking hose, and I ended up just going on Amazon and buying a whole assortment for $10 that arrived the next day, so I wouldn't have to make a trip to the hardware store. Amazon just makes it way too easy and cheap. Now, I have the following stocks trading at approximately their one-year price target number, and any dip would represent a great buying opportunity. I have Google's price target at $1,651, Microsoft at $214, and Tesla at $409. Now, Google had just hit an all-time high of $1,700 for the first time on September 1st. Unfortunately, the tech slump pulled it back down to $1,600. I think at this point, Google is fairly valued, but any dip would be a great deal. Now, it was just announced today that the DOJ plans to bring an antitrust suit against Google, but a lot of the responses I've seen to this antitrust suit seem a bit questionable on whether or not this is likely to succeed. Apparently, the career lawyers on the case thought that they needed more time to get the case ready for trial, but they were overruled by the Attorney General, and they're going to go ahead and bring the charges sometime in the next week or two. Google's been negotiating with the EU about taxes over the Digital Services Act recently implemented, but most likely, regardless of how the situation resolves, Google's going to pass these taxes on to the ad purchasers, so I don't really see this as a huge impact on Google's business long term. Now, recently, Microsoft has seen the most growth it's seen in a while because of the cloud business expansion. Right now, I have it priced around my 2021 price target of $214, so if we do see any dips, I do think that it opens up a buying opportunity. We've seen some slowing in the revenue generated from the cloud business, which might be a sign that the big boom we've seen is slowing. However, the overall revenue and earnings per share growth grew at almost 14% between 2019 and 2020. Microsoft as a company is still performing extremely extremely well. Now, Tesla saw the biggest drop in this tech sell-off, but nothing on this business has really changed. This looks like volatility to me. I have Tesla's price target at $409, so it is priced right around that number. This is another opportunity where if you saw any sell-off, I would definitely get aggressive buying Tesla stock. Because momentum has driven the stock so much lately, it's possible that this sell-off brings the stock price down pretty far. If that does happen, I think it's an opportunity because of the growth Tesla is able to achieve. If you were to buy a little here and then buy a little more as it goes down and get more aggressive the farther it falls, I think you're going to do extremely well with Tesla. Okay guys, so that's the video. Don't be afraid to buy the dip. Remember when stock prices go down that you're only getting more for your money. And the lower the stock price is, the less risky it becomes. These tech companies are the best performing companies, not only in their stock price but in their fundamentals. And until people stop using computers and technology, I don't really see tech going away anytime soon. Thanks for watching.